Have you ever wondered how much commercial real estate is changing hands in a single week? Let's dive into some fascinating transactions that have been making waves in the real estate world. Welcome to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. Let's get right to it. In the week of March 9th, 2025, we saw significant commercial real estate transactions across several counties, including Charlotte, Collier, Hillsborough, Lee, Manatee, Pasco, Pinellas, Polk, and Sarasota. These transactions are valued at over $1 million, highlighting the bustling activity in these regions. In Collier County, CEMT Naples Incorporated purchased an assisted living facility from FC Encore Naples, LLC, for $10,500,000. This property, located at 777 9th Street North in Naples, had previously been sold for $7,234,500 back in September 2016. Meanwhile, in Hillsborough, BMF VFL Crosstown LLC acquired apartment units from Sreet Crosstown LLC for $76,250,000. The previous price of these units was $58,300,000 in October 2015. This transaction took place at 9712 Bosque Creek Circle in Tampa, showcasing the increasing value of multifamily properties in the area. Lee County also saw significant activity with Continental 919 Fund, LLC purchasing multifamily units from CGGG Alico LLC for $56,760,000. This property, located on Vintage Commerce Boulevard in Fort Myers, was previously valued at $4,544,169 in October 2021, marking a substantial increase in its worth. In Pinellas County, Southbrook Largo Propco LLC bought a manufacturing plant from Southbrook Corporate Center LLC for $22,700,000. This property, situated at 10,950 Belcher Road South in Pinellas Park, had a previous price tag of $6,112,000 in December 2018, reflecting a notable appreciation in industrial assets. Finally, in Sarasota, Red Apple at Fruitville LLC purchased a church property from the Faith Baptist Church of Sarasota, Florida, Inc. for $3,500,000. This property, located at 8751 Fruitville Road, was previously sold for $374,900 in December 1996, demonstrating the rising value of commercial properties over time. In Half Moon, New York, a significant development is on the horizon as plans are underway for the construction of 6 commercial buildings on a 14.5-acre site along Route 9. This project, spearheaded by Alan Goldstein, a car dealer, aims to bring a mix of retail and self-storage facilities to the area. The location is strategically positioned between Hoff Jewelers and a Time for Pause, right across from the Walmart Supercenter, providing a prime spot for commercial activity. The proposed development includes a variety of structures designed to cater to different commercial needs. The layout features a one-story, 6,000 square foot retail or commercial building and a one-story, 2,000 square foot building with a drive-through, both fronting Route 9. Additionally, the plan accommodates 3 self-storage buildings, each 12,000 square feet, and a larger 3-story, 35,000 square foot self-storage facility. A total of 83 parking spaces will be available to support these new establishments. Alan Goldstein acquired this parcel in 2023 for $2,200,000 from Dechamai Asset Trust, a Jacksonville-based organization that assists with managing non-cash donations. The land was initially donated to Dechamai Asset Trust by Donald C. Green, who has been divesting much of his real estate portfolio in southern Saratoga County. This includes the sale of the Clifton Park Center Mall and a donation of an office building to the Shenendehowa Central School District. As the development progresses, the Planning Board has scheduled a public hearing on May 12th to discuss the plans further. Dan Davitt and Tom Savino from CBRE Upstate New York are already marketing leases for the retail pads along Route 9. According to Savino, this is a valuable piece of real estate, given its location on a busy road and the scarcity of similarly sized parcels in the market. AT&T Incorporated, a leading telecommunications company, has vacated its long-held corporate office space in Redmond, Washington. The office, located at 7277 164th Avenue Northeast in Redmond Town Center, comprises 73,000 square feet. According to a report by CBRE, AT&T has not leased another space elsewhere, indicating no immediate plans for relocation. CBRE began marketing this commercial property for lease in May 2024, with the lease expiring in February 2025. The building is part of a larger real estate acquisition by Invesco in June 2018, which included 6 office buildings in the mixed-use commercial center. Among these, 4 are leased by Microsoft, and 1 was expanded into by Amazon in 2021. The vacated office space by AT&T is a reflection of a broader trend within the telecommunications industry across the Puget Sound region, where companies like T-Mobile and Verizon have been reducing their office footprints. T-Mobile has offered to sublease entire buildings near its Bellevue headquarters, while Verizon relocated from a 71,000 square foot building to a smaller space subleased from T-Mobile. A report by Fierce Network, a telecom trade publication, highlights significant workforce reductions across the industry. AT&T's workforce, for instance, shrank from approximately 247,800 employees in 2019 to 140,990 in 2024, representing the largest contraction among major industry players. This trend has impacted the real estate decisions of telecommunications companies, as seen in the case of AT&T's Redmond office. Surabaya's retail market is on an upward trajectory, with a projected annual occupancy rate growth of 3% until 2027. This comes as rents are also expected to rise by 2% this year. According to Colliers, Surabaya continues to be a dynamic retail destination, driven by a combination of festive events, promotional campaigns, and strategic mall activities. In the second half of 2024, Surabaya's retail occupancy rate was recorded at 72.5%, showing a modest improvement compared to the first half of the year. This growth is attributed to the city's ability to adapt and evolve, with malls actively working to attract shoppers through strategic leasing and new store openings. The market's resilience is evident, with projections indicating occupancy could reach around 76% in 2025, continuing to grow annually by 3% until 2027. Ferry Salanto, Collier's head of research, noted that Surabaya remains a vibrant city for shopping activities, with demand concentrated in high-traffic malls offering strong tenant mixes. Notable leasing activity has been observed in prominent malls within mixed-use developments, highlighting the strategic positioning of retail spaces in the city. To maintain their appeal, landlords in Surabaya are enhancing tenant mixes by targeting lifestyle-driven retailers and offering flexible leasing options to attract emerging brands. Effective marketing strategies, such as loyalty programs and promotions, are essential to increase foot traffic. Landlords are also encouraged to stay updated on retail trends and tenant feedback to identify opportunities for improvement and innovation. Looking ahead, demand is expected to grow by approximately 4% per year during 2025 to 2027, driven by the increasing confidence of fashion and food and beverage retailers. Rental rates are anticipated to grow by approximately 2% in 2025, with service charges rising by nearly 3%. These adjustments reflect landlords' confidence in investing in modernizing properties and creating engaging retail environments, aligning with evolving retailer and consumer expectations. In the latest development in the commercial real estate finance sector, J.P. Morgan Chase & Co. has significantly increased its holdings in shares of Apollo Commercial Real Estate Finance Incorporated. According to MarketBeat, the financial services giant raised its stake by 130.1% during the fourth quarter. The firm now owns 480,852 shares of the Real Estate Investment Trust stock after acquiring an additional 271,908 shares during this period. At the end of the most recent quarter, J.P. Morgan Chase & Co. owned approximately 0.35% of Apollo Commercial Real Estate Finance, valued at $4,164,000. Other institutional investors have also been adjusting their positions in Apollo Commercial Real Estate Finance. Jane Street Group, LLC increased its holdings by 139.4% in the third quarter, now owning 302,388 shares valued at $2,779,000. Barclays plc also boosted its stake by 65.9%, now holding 329,462 shares worth $3,028,000. Merit Financial Group LLC increased its stake by 10% in the fourth quarter, owning 114,639 shares worth $993,000. Meanwhile, Diversify Wealth Management LLC and SG Americas Securities LLC have acquired new stakes in the company, valued at $129,000 and $93,000 respectively. Currently, institutional investors and hedge funds own 54.43% of Apollo Commercial Real Estate Finance's stock. The stock of Apollo Commercial Real Estate Finance opened at $8.34 on Friday, with a market capitalization of $1.16 billion. The Real Estate Investment Trust has had a 12-month low of $7.70 and a high of $11.20. The company maintains a quick and current ratio of 51.19 and a debt-to-equity ratio of 0.67. Apollo Commercial Real Estate Finance recently announced its quarterly dividend, which was paid on April 15th. Shareholders of record on March 31st received a dividend of 25 cents per share, representing an annualized dividend of $1 and yielding 12%. Despite a negative net margin of 39.40%, the company reported a positive return on equity of 9.37%. In insider transactions, CEO Stuart Rothstein sold 52,074 shares on March 17th, decreasing his ownership by 11.89%. Director Carmencita N.M. Wander sold 11,000 shares on March 4th, reducing her position by 53.34%. Insiders currently own 0.68% of the company's stock. Wall Street analysts have issued mixed ratings for Apollo Commercial Real Estate Finance. While UBS Group and JP Morgan Chase & Comers have issued neutral ratings, Keefe, Bruyette & Woods upgraded the stock to outperform with a $10 price target. StockNews.com also upgraded the stock to buy. Overall, the stock has a consensus rating of hold with a target price of $9. Apollo Commercial Real Estate Finance operates as a real estate investment trust, focusing on originating, acquiring, investing in, and managing commercial first mortgage loans, subordinate financings, and other commercial real estate-related debt investments across the United States, the United Kingdom, and Europe. Thank you for listening to the Commercial Real Estate Insights podcast. I'm your host, Steve Hamoen. See you on the next one.